Okay, I keep seeing this online. Somebody buys a $10 million private jet, and everyone says it saves them money on taxes. That makes no sense to me.
It makes perfect sense. You're just thinking like someone who earns money. Start thinking like someone who owns things.
I'm going to need you to explain that.
Gladly. When you buy something for your business, the tax code doesn't treat it as money spent. It treats it as money moved. You still have the value, it's just sitting in an object now instead of a bank account.
Fine. But you still handed over $10 million.
I did, and in return the tax code let me subtract that $10 million from my taxable income. All of it. In the first year.
The entire thing? Not spread out over 20 years?
Not anymore. It's called bonus depreciation. Normally you'd deduct a little each year as the asset wears out. Bonus depreciation lets you take the whole deduction immediately.
So what actually happens to your tax bill?
Say my business earned $12 million this year, I buy the jet. On paper, my income is now $2 million. I'm taxed on 2, not 12.
That's a difference of what, $3-4 million in tax?
Roughly. And notice what just happened. The government paid for a third of my jet, and I still own the whole jet.
Hold on, that has to be illegal.
It's the opposite of illegal. It's written into the law on purpose. Congress wants businesses buying equipment because equipment means factories, jobs, orders for manufacturers. The deduction is the bribe.
A bribe to buy a private jet.
A bribe to buy anything a business uses, trucks, machines, servers. The law doesn't care whether the asset is noble. It cares that money is moving.
Okay, but here's what bothers me. You spent $10 million to avoid $3 million in tax. You're still down $7 million.
Correct. And that's the part nobody says out loud. Nobody buys a jet to save on taxes. You buy the jet because you wanted the jet. The deduction just makes owning it cheaper.
So the whole thing is a scam?
No, it's a discount. If the jet was already going to happen, the tax code just took 30% off. That's not nothing.
There's something else. If you took the entire deduction in year one, you have nothing left for the years after. So you didn't save the tax, you just moved it.
Now that is a genuinely good point, and most people never get there. You're right. It's a deferral, not a discount on the total.
So why does anyone bother?
Because a deferral is an interest-free loan from the government. $3 million in my hands today, invested for 10 years, becomes far more than $3 million. The tax bill I pay later is paid with cheaper dollars.
The money makes money while you're not paying it.
That's the entire game. Timing. Rich people rarely avoid tax outright. They push it into the future over and over until the future belongs to someone else.
There's a second reason, isn't there?
There is. Rates. Take the deduction in a year when you sold a company and your income is enormous, taxed at the top rate. Pay the tax back later in a quiet year at a lower rate. You didn't just delay, you arbitraged.
And when you finally sell the jet?
Then the bill arrives. It's called depreciation recapture. You deducted the value, so when you sell, that value comes back as income and gets taxed.
So the government does get paid eventually.
If you sell. Which is why the wise move is, don't.
You just keep it forever?
Or trade up. Sell the old jet, buy a bigger one, take a fresh deduction that swallows the recapture. The bill keeps getting handed to next year's version of you.
This is starting to sound like a treadmill.
It is. And that's why the jet is the small trick. Would you like to hear the big one?
There's a bigger one?
Ask yourself something. Billionaires own tens of billions in stock. If they sold shares to pay for their lives, they'd owe capital gains tax every single year. So how do they buy houses and boats without ever showing income?
They sell a little?
They borrow. The stock stays put. The bank lends against it at low interest because the collateral is enormous. And loans are not income, so there is no tax.
Wait, you can just live on borrowed money?
Millions of dollars a year, tax-free, as long as the portfolio keeps growing faster than the interest. It has a name: buy, borrow, die.
I'm afraid to ask about the last part.
When you die, your heirs inherit the stock at its current value, not what you paid. The lifetime of gains you never sold, for tax purposes, they vanish. The loans get settled from the estate, and the gain is never taxed at all.
So the trick isn't a loophole in one rule. The trick is never triggering a rule.
Now you understand wealth. Income gets taxed. Ownership does not. The system taxes the act of earning, and rich people simply stop earning. They own instead.
None of this helps me. I don't own a jet, and nobody's lending me millions against my index fund.
Then use the small versions. Same logic, smaller scale, and they're sitting right there in your tax return.
Such as?
A retirement account is a deferral. Deduct now, pay later. A health savings account is better, deduct now, and never pay at all if you spend it on healthcare. If you have a side business, Section 179 deducts your laptop the same way my jet was deducted.
That's the same 3 moves. Deduct now, delay the bill, own instead of earn.
Precisely the same. The rules are public. They're printed in the tax code, free to read. The only real difference between us is that I hired someone to read it.
So what do I actually do on Monday?
3 things. Find every deferral you already qualify for and use it. Turn earned income into owned assets as fast as you can. And when a fee looks small, multiply it by 12. Then by 10 years, the same arithmetic I use on jets.
And the jet.
The jet was never the point. It was just the most expensive way to show you the point.